Alright, my name is Glenn. Hi everybody. Today we're going to discuss about the 5 digital banking licenses recently announced by MAS. So out of the 5, 2 of which are the full bank, digital full bank licenses, which provide a wide range of financial services and take deposits from retail customers. And it is only open to companies headquartered in Singapore and is controlled by Singaporeans. If you are a foreign company, then you are only eligible if you come have a joint venture with a Singapore company. The other 3 will be digital wholesale bank licenses, and this allow the licensees to serve SMEs and other non-retail segments, and is open to both Singapore and foreign companies. Applicants must also meet the same eligibility criteria as the digital full bank, as mentioned earlier. So, yes, right. What makes a bank a digital bank is the bank conduct their business digital. I'm just kidding. Sir, okay. So, a digital bank is when they conduct their banking services online, and it's done through a phone or laptop, and it provides very convenience for their customer. So digital banks use their API to do like process automation, and it significantly reduces the manpower needed to manually do these processes, and it save a lot of cost. Okay, so without the licenses, there will be many digital banks in Singapore due to the low barriers of entry. Because if there's no license, it's not regulated, right? So if it's not regulated, then everybody can just come in like this. So this is to encourage digital banks to compete for their licenses and to ensure that only the top performing and reliable banks are allowed to conduct their operations in Singapore. So this will set a high barrier of entry into the digital banking market, and to also prevent other companies to just start a digital bank and conduct illegal business such as money laundering. Okay, so a sustainable digital bank business model means that the bank optimizes its customer interactions, products, processes, and data around digital technologies. So successful digital banks are attractive with the presentation of their software and user interface, which is actually one of the key things people would take a look, like the ease of it and how outstanding it looks, right? And are also digitally efficient with data processing and process automation. They use mobile and digital technologies to lower the cost and serve, and at the same time these technologies are also used to enhance higher touch services. So a company that has a sustainable digital banking business model will suggest that the bank will be operating in Singapore for the long run, which is what the government wants from banks. As we know that those banks that want to operate in Singapore, they have to stay for the long term. Okay, so the bank, for a bank that has to stay for a long run, it will have attained a certain level of reputation and therefore can be trusted and is very reliable. So in the event that the bank does not have a sustainable digital banking business model, it will cause consumers to lose their investment and savings with them. And for a bank to fail, it means that something big can happen, and it can happen to other banks also. And consumers' trust in the bank will not be as high, there will be doubts and etc. So yeah. Okay, so what are the advantages and disadvantages for banks and their clients? So, first, let's start off with the banks. The advantages for banks pretty simple. Is cost effective, cost efficient. It's like it reduces operating costs and manpower, so they don't really need to hire staff and to do these processes, etc, etc. So the disadvantages for banks is, what if their system get compromised, right? Or like getting hacked, technology failure, right? System crash, etc, etc. And it's also very difficult to build relationship with their customers, because there is no human to human interaction, right? There is no feelings So very hard to earn their customers' trust, and therefore it'll be harder to cross-sell products, and it may not be very effective. For clients, the advantages is that there will be a faster response because over the internet. So um, they just maybe want to withdraw money, they just do it like this, or transfer cash. And it's also very convenient, right? They don't have to go down to the physical branch, take a queue number and wait for probably 30 minutes, I don't know, around there. So yeah, they don't have to queue, don't have to waste time. But for the disadvantages is there is a chance that there may be a cyber attack, like as we have seen in SingHealth, from SingHealth. Uh, it's quite possible that it may happen to a digital bank as well if hackers are always constantly improving their skill to try to surpass new firewalls and etc. encryption. Another disadvantage is there might be a telecom error or problem. They might not have service or it may be down. So with no internet access, then they can't do digital banking. So that is a big problem. Or even if they may be at certain places, like say in a lift for some reason, and they want to do a transfer, they have to get off the lift before they can do it. But not only just lift. I mean, there are some places that don't have service. So yes. Okay, so now Hong Kong and Singapore are very close on the top financial countries in terms of ranking, but due to the recent political unrest in Hong Kong, it's not surprising that Hong Kong's ranking falls below Singapore. Um, since Hong Kong and Singapore are close competitors, as one country issues or regulate come out with new regulation, the other will also follow suit so as to keep up the competition. So when Hong Kong issues their digital banking licenses, MAS also follow. And I think this is because that if MAS didn't issue their banking licenses, then more digital banks will uh, find Hong Kong more appealing, as since if there's a license, it will be regulated, and therefore uh, with the license they'll have more customers, as customers will feel that these banks are more reliable and trustable because if they are liable for anything, it's backed by the government, so the government will make sure that these banks are liable for the errors that they make. So that's why there's more confidence and trust in the banks with licenses. So I think that's why MAS also decided to give out their own digital bank license so that will still keep up the competition with Hong Kong. Right. So okay, so in the long-term future, there may be more digital banking licenses being issued in both Singapore and Hong Kong. Who knows? Because after digital banks have proved that they are quite sustainable, and the government will feel safe to issue more licenses so that more digital banks can operate in the country. So the thing that I feel that in the future, since there will be more digital banks, right, there may be different digital banking licenses. So like now currently traditional banks, they have banks for private banking, banks for uh, consumers, banks for businesses. So perhaps in the future there will be a digital bank like for private banking for high net worth individuals. So these will enable like higher value transactions, right? And of course there will be perhaps like a new digital banking licenses for private banking. But for in Hong Kong, since there is a political unrest right now, it's not a guarantee that it will not happen again in the future. So for innovations to start in Hong Kong, it will be very difficult, as it will take some time for new licenses to be issued in Hong Kong. So value destruction competition is where a market and or product or a service they had a lot of value that is replaced by something different, something new, resulting to its loss of value. And this value can be like a reputation or price. So for example, um, when cell phones came in, it destroyed the pages, destroyed, and when smartphone came in, it did the same to cell phones. So now, in the finance industry, right, it is very large and strictly regulated. So as a new digital bank service or product comes out in the market and it destroys the value of the current banks, these current traditional banks, it will be very difficult for the world and the economy to keep up as they will be going through a very huge change. And as I mentioned, it's large and strictly regulated. Take a very long time for the monetary authorities and regulators to actually come up with licenses and new rules to regulate this new service or product. And instead of improving the economy and hoping that you go faster, it actually slows down because since the current banks are destroyed, it loses businesses, so it kind of defeats the purpose of growing the economy. And this is my thoughts. Now, what makes a bank a digital bank?